There are two types of capital methods under partnership. One is fixed capital method and another is fluctuating capital method. Let me tell you something about partnership. Partners have options. They have two options. Either they can keep their capital accounts as per fixed capital method, or they can keep their capital accounts under fluctuating capital method. Okay, and this kind of decision they'll have to take while framing the partnership deed. They can mention it there, or they can orally agree between each other or among each other. Understood the point? Now, what happens? As you understand, fixed means the amount of capital remains unchanged. For example, there are A, B, C, three partners, and each partner has invested, say, for example, 20,000. All right. Now, year by year, if they do not do anything with their capital, then the same balance will be shown in their capital account all the time, 20,000. Only two kind of changes are allowed there. One, either any of them adds some more capital, or any of them withdraws some portion of capital. Only in that case the change will happen. Otherwise, these capital will not change at all. All right. Say for example, after few years or few months, A added 5,000 more. So his capital balance will show now 25,000. Say for example, B withdraw 1,000 rupees, then his capital balance will show 19,000, and he did not make any change. So his capital balance will show all the time 20,000. Okay, and these balances will go on and on until unless they withdraw or add some more capital. Understood? So that is according to fixed capital method. Okay, now in fluctuating capital method means, fluctuating means that keeps on changing, sometimes up, sometimes down. Understood? Okay, that keeps on changing because all the adjustments related to partnership business, like if the partners are getting interest on capital, it will be directly added here. If the partners are getting salaries, it will be directly added here. Okay, if partners are getting share of profit, that will be added here. If they are occurring loss, it will be deducted, it will go down. Okay, similarly, if interest on drawing is being charged, it will go down. So all the adjustment will be done here in a single account. That is why the amount of capital keeps on changing. Every time you will find different balance. Okay, because adjustments are happening there, but here the adjustments are not happening. Now the question arises, now where the adjustment will happen in that case? For the adjustment, we have separate account, that is current account. So under this system, we maintain two accounts, and under this system, we maintain one account. Here two account, one account is capital account and another is current account, and here only single capital account. So let's understand difference between these two methods very minutely. So now you can see on your screen that difference between fixed capital method and fluctuating capital methods are given. Okay, so the very first base of difference is change in capital. So like I told you, the capital remains unchanged except in some special circumstances. And what are those special circumstances? Already I have explained you. One condition, when the partners are adding some more capital, or another condition when they are withdrawing the capital. Understood? And under fluctuating capital method, what happens? The capital fluctuates quite frequently from period to period, because every year at least you need to add share of profit, or you need to deduct loss of profit. So the difference will come every year. Okay, now number of accounts. Here two accounts are maintained, with capital account and current account, like I told you. And here only one account is prepared, that is capital account. Adjustment of drawings, etc. All adjustments of drawings, salaries, etc. are done in current account here. And here all adjustments of drawing, salary, etc. are done in capital account. So understand it in proper way. Okay. Now negative balance. Fixed capital account can never show a negative balance, because that remains fixed. But fluctuating capital method can show you negative balance as well, because if the loss exceeds, then the capital goes in negative. But here in that case, under fixed capital method, current account can show you the negative balance, but capital account will never show you the negative balance. Understood the point? Okay, now let's move on towards the format of these. When we see the format, we can easily understand. Already we have learned the journal entries, so those journal entries will be utilized here as well. You can reread them, only then you can understand proper way. So very first, let's have a look of fluctuating capital method. As you know very well, only single account is maintained here, that is partners capital account. We start from credit side. As we know that this is a liability, so all the liabilities show the balance in the credit side. The opening balance will come here by the name of by balance BD. All right, then if partners add some more capital, that will be added here by cash or by bank. Okay, so interest on capital, remember that at the time of passing journal entry, we pass one entry, interest on capital account debit to partners capital account. So partners capital account is a kind of ledger, so if you pass that journal entry to this ledger, you will get the same entry by interest on capital. You can check it again. Now same condition is applied in case of partner salary or commission. Okay, and then profit and loss appropriation account, that is share in the profits at last, the entry we did. Okay, now see the debit side. Okay, to balance BD, if the negative balance, because like we have already discussed, capital fluctuating capital method can show you the negative balance as well. So if the negative balance is there, that will be shown here by the name to balance BD. But if it is positive, then it will not come. Okay, and if some portion of capital has been withdrawn, so to cash or to bank will be shown. Okay, and if drawings have been made, that will be shown out of profit. Understand these two terms. If capital is being withdrawn, then it will be shown by a name of cash. But if amount of profits only being withdrawn for personal uses, okay, so that will be entered by the name of drawings. Understood? Now if the loss is there instead of profit, then the profit and loss account, like I told you that in case of loss, we do not prepare profit and loss appropriation account directly, we distribute the loss from profit and loss account. That is why profit and loss account is mentioned there in case of loss. And another, to interest on drawings. Okay, that will also be mentioned here. You can check the journal entry of interest on drawing. Okay, and then to balance CD. So if the credit side total exceeds the debit side total, you will get the balance in the debit side by the name of to balance CD, that is closing credit balance. But if still your fluctuating capital is showing the negative balance, then you see that by balance CD. All right, now let's move on to another method, that is fixed capital method. Like I told you that there are two accounts prepared, one is capital account and another is partners current account. So whatever adjustment we made related to interest on capital etc., that will be done here under partners current account. So very first, let's have a look on partners capital account. In partners capital account, we transfer the opening balance by balance BD. Okay, if partners are introducing more capital, then by cash, by bank, it will be mentioned. If they are withdrawing some portion of capital to cash or bank, it will be mentioned, and the remaining balance will be shown only in debit side, because this does not show negative balance ever. All right, now partners current account. If the partnership is old one, they may have current account balance already in their books of account. So if the balance is there, it will be brought here. If the balance is shown in the balance sheet credit side, then it will come by the name of by balance BD, means credit balance. And if the balance is given in the asset side, current account balance I'm talking about, so then it will be mentioned here to balance BD. Okay, in the debit side, you can have a look. Now again, we focused about credit side. By interest on capital, same entries you can see which we mentioned already in the capital account under fluctuating method. Interest on capital, partner salary or commission, profit and loss appropriation. Okay, and here in the debit side you see two drawings, to interest on drawing, to profit and loss account means loss. Okay, and final the balance to balance CD. Okay, like I told you that the current account can show you the negative balance, that's why in buy side also the balance is being mentioned. Okay, so study them very minutely so that you can understand the difference between the two. Very soon we are going to attempt numerical questions on them, so that you can have good grasp over these concepts. All right, so this is all for today's session. I'll be meeting you in the another session very soon. Till then, bye bye, thank you.